What's up and welcome back to my channel. It's JVceo. Today we're going to talk about the stock market. We're going to have a chat about the stock market. Why did the market crash? What am I doing in the market at the moment? But also, how could you cushion yourself for a potential crash? Because there's all this thesis and theories that the stock market will crash majorly during the last quarter of this year. So I'm going to address all of that in this video. Just a quick one. I've got quite a backlog of videos, some of those that I shot before going to Ghana, and I'm going to try and put those out. So I'll probably try and release videos twice a week moving forward. And if you're tuning in for the first time, please make sure you like, comment and subscribe. So now that we've got that out of the way, let's crack on with it. So excuse me. So January, I haven't actually sat here since I came back from Ghana. I've been in my downstairs office. But anyways, January and February, first half of February, were brilliant months on the stock market, and even last year as well, brilliant months on the stock market. I'm saying like several 1,000% runners, 2,000% runners, 100% runners, daily occurrence. You can go into the stock market with £10,000, and before you know it, you've made 50,000 or 60,000, 70,000. I mean, I have several clients, for example, that came into the stock market in January with £3,000 and they had 12,000 by the start of February. For those of you that need some support in terms of the stock market, if you want someone or a team that can give you entries, exits on stocks and analysis and all of that stuff, then make sure you go into the description box below and join our Stocks and Pips. But that's out of the way. But something quite spectacular happened, right? The market crashed. Well, it had what I would call a mini crash around February, I would say, wasn't it? Yeah, around the start of February. But we quickly adjusted to that. And then, it was kind of back to normal business as usual. And then, if anything, some stocks actually hit newer highs again, like newer yearly highs during that period after that mini crash at the start of February. But now, in the last sort of week, maybe even 2 weeks, 10 days, I would say, it's been an even bigger crash. And I attribute that to a lot of things. And I think if you're going to be in a market, it's important for you to understand all these the reasoning and also catalyst for some of the things that happen in the market. So last year was unsustainable, if I'm honest with you, and even through to this year was unsustainable. We saw a huge bull run, and the market was in need of the market needed how do you say that word? A much needed correction. The market needed a much needed correction. You know what I'm on about anyways, but the market needed a correction. But I think this is different. I don't see it as a correction. I feel like, we know the market never goes up like this. The market goes up like this, new high, this, new high, this. But this is what the market has done. The market has done this. So let's say the market started from here. Market has done this, moved up, moved up, moved up, and then come all the way below even the entry point, or below the lows for the year, and the market has created new lows. And I think that's a scary one, if I'm honest with you. There are loads of people giving different theses on it and saying, look, there's a bigger crash coming soon, and I'd stay in cash, essentially speaking, saying that they're not doing any long-term trades, and they want to stay in cash, be ready to capitalize, and so on and so forth. But I, in my opinion, in my humble opinion, I don't think that there's a crash coming just yet. I think we've still got a few months of playtime before everyone has to buckle down and really pay some attention to the economy in terms of a potential crash coming. The reason why I say that is that there's so much positive catalyst at the moment, like so much positive catalyst. So firstly, the bill has just been passed, that being for the stimulus package. So that's hitting the market soon, and it's impossible for the market to price that in. The reason why I say it's impossible, I mean, the market will price it in. My opinion is that we'll start next week greener than we closed last week. Well, we'll start this week greener than we closed last week. And that's the market pricing it in slightly, but the market can't fully price it in. The reason being, the hardcore cash is still yet to come. Like, once that stimulus gets distributed, people are going to take that money and put it back into the market, and that's when the market would really start recovering, and that's when we may see new yearly highs on these new 52 weeks highs on some of these stocks. However, I think the way the market has gone in the last sort of 6 to 12 months has been massively unsustainable. And even the way, let's say, the S&P 500 is moving, the way the Nasdaq's moving as well, it's bringing a few causes for concern, if I'm honest with you. A few causes for concern. So an example being, the Nasdaq had all its gains in the last sort of 2 months, like all the gains from 2021 wiped off over 2 trading days. That's scary, you know. That's scary. That there is scary. So what's the sole reason for the market crashing? I think is a number of things. So firstly, I would say, how can I forget? How can I forget? I think that whole Wall Street bet stuff, I think definitely threw the market off 1,000,000%. And the market makers had to, you know, sort of rein things back in and try and gain control of the larger market. I think that's definitely one of the reasons. Another reason I think why the market's crashed is people don't like to give credit to like UK investors, but I think UK investors, well, let's talk penny stocks for a minute, right? I think UK investors actually occupy quite a huge percentage of the market. Obviously, a bigger portion is occupied by the US, but I think the UK are holding, you know, quite a significant percentage of the market. And what's happened is, for those of you that are on Trading 212, Trading 212 has restricted several stocks. You know, so they've put a lot of stocks on close only modes. So from the LLKKF to the Gaxis and the ATVKs, and like a lot of these stocks are on restricted sort of sell orders only, and you can't purchase them, so you can't average down. And technically speaking, this is what they've done. It's common sense, right? So if you restrict people from buying a stock, now the demand is really only geared towards selling. Of course, the market is going to sell off. It's only logics. And you know, the same thing happened during that whole GameStop saga and AMC Nokia saga and so on and so forth. So I think as a sort of fallout from that, I think you know, the market makers are trying to reset the market and probably shake out a bunch of the retail investors. Because if you hear from the Weebles and the Robin Hoods and the Trading 212 and all these platforms, they will tell you that there's been a significant influx of, you know, sort of new traders, and that they can't cope with it. And I don't think the market likes that. The market has always been in order of a certain kind, and now it's being thrown off order. It's being thrown off track. So I think, you know, the market makers are sort of reining things back in, and that's their way of calming things down. Right. Talk about I think also, actually, leading on from that, right? I think another reason why there's been a huge sell-off is, you know, all the big cap companies are having a major sell-off, and there's no catalyst behind that of such. So you look at Tesla, for example. Tesla has gone from a high of like $900, sitting at like $500 and something. That's crazy. That's around percentage-wise. That's around 80% down from 900, isn't it? Yeah, probably about 80% down from 900, I'd say. My maths may be off, so if my maths is off, then ignore me. But again, you know, if the big caps are being sold off, then what do you expect from the penny stocks and so on and so forth? So I think that's that. I would go as far as saying, these are all my opinions, by the way, my theories. I would go as far as saying that the market sold off as an adjustment to Joe Biden, you know, because I feel like Trump may have been better for the stock market, because Trump was always sort of bold enough to, like, you know, make wild moves or wild claims that would temporarily, at best, or at least prop up the market. But I think Biden is a lot more cautious with his sort of tactics and stuff, and I think that's part of the reason why the market is sold off. What else am I missing? But yeah, I think that's it. But anyways, to sort of move on from that and talk about what I'm doing differently moving forward. There's some interesting videos coming along, by the way, talking about stock related as well, but I don't want to give too much away. But sort of moving on from that, what am I doing personally? I've changed up my portfolio. So for some of you that know, I made a lot of money doing penny stocks. Probably in the last sort of 3 months, I made a lot of money doing penny stocks. But you know, in the last sort of week that the market has been red, I've also, you know, lost a fair bit of money, essentially speaking. And that was a learning curve for me. I should have made money off the pennies and then changed my portfolio. That was always the plan, but then I just never done it. So I'll give you an example. If you got 400, let's not use 400,000. Let's use a reasonable amount. Let's say 50,000. If you got 50,000 in your stock account, rather than trading 100% pennies, at 50,000, that's quite a substantial amount of money. I'd probably only put 10 grand towards pennies, like 10 to 20% of your portfolio towards pennies, and then the other sort of 60% on you know, on proven stocks and big caps and stocks above maybe like sort of $7 that are not as volatile as penny stocks. Because penny stocks, you can make a lot of money from it, but you can lose a lot of money from it. And I said 60%, and some of you are thinking there's about another 10-20% left, and I would always leave that in a cash position so that when there's a market crash like this, you could always average down. So this is what it's taught us. And for those of you on the market, I will say keep pushing, stay resilient. These are here to sort of shake off the weak bellies, those that ain't got the stomach for it. But you know, if you feel like you've got the stomach for it, if you have the right guidance, you can make a ton of money in this market. Like, I'm looking at certain stocks which I'm not going to mention, right? Go onto the Instagram, Stocks and Pips. I'll be releasing 2 new stocks for free tomorrow on Instagram, on the Instagram stories. But you know, there's what we call it's been a shopping, it's been a sale for the last sort of week or so. You know, there's some really good stocks that, like, I'm saying, like 10 years from now, it could be like a Tesla. 10 years, like literally some really good stocks that are so undervalued at the moment that it makes absolutely no sense, you know. And now, if you're in it for the long game, then why don't you sort of you know, purchase these stocks now and just sit on it, and then still, you know, do your short-term trades and so on and so forth. But these stocks are so undervalued, it's crazy. Even on the short-term basis, you would make a lot of money from these stocks. So I'll release some of them on the Instagram page on Monday, that being tomorrow. So that's what I'm doing. So I'm changing my portfolio, and I'm going more big caps. I'm going more secure stocks and less pennies. I've done more than enough from pennies. I'll still stay in pennies, but not have a big, mate. At one stage, I had 200 grand in pennies and $250,000 in pennies, and that's just crazy. Like, you should never have that sort of numbers in pennies. I mean, some people do, and they end up making stupid amount of millions. Don't get me wrong, but you know, I'm more. As much as I talk about big balls, I'm more about also playing it safe and not being stupid, you know. So I should never have had, you know, crazy amounts of money in pennies and stuff. So I've just changed my portfolio around and that. Also, another thing that I'm doing is I'm starting to use my ISA account. So I'll use my ISA account for like long-term trades. When I say long-term, minimum 10 years. So like putting in, let's say, 5 grand on a stock that I really love. Like, I'm in love with this stock. I'll put 5 grand in there. Forget about it. Literally. So that's my pass on to my kids sort of stock. That's my live beautifully in your 40s stock. That's my retirement sort of portfolio. I use the ISA account to do that. And also, when the crash does happen, whenever it does happen, all the shopping and all the cheap shares that I'll be getting, some of those, the long-term ones, I'll be buying it through the ISA and never actually touch that, and just kind of let that just crack on and just let that accumulate and build up. So that's what I'm doing. Trade carefully. It's been difficult to make money on the stock market. Like yesterday, I done 10 grand and I was fucking happy. Excuse my language. I was really happy. You know, I was really happy. Reason being, you know, I'd always had, you know, I'd always been used to like 10 grand days, 20 grand days, sometimes even a 40 grand day. And that kind of disappeared for like quite a while. And, you know, I started struggling, So when I done 10 yesterday, oh, well, when the market closed on Friday, I was quite chuffed about it. But that's that anyways. That's my sort of opinion in terms of the stock market, where it's at the moment. I think it's going to pick up. And I think the stock market is out of shape due to all the Wall Street bet stuff. And I think it's being sort of bent back into shape at the moment. And I think you should just be ready for it. So trade carefully. Always look at the wider picture. Don't just have a tunnel vision. And, you know, never sell for a loss, especially if you've done your due diligence well. If you've done your due diligence well, there's absolutely no reason why you should sell for a loss. But that's that about the stock market, and in my opinion, I think that's why the market's dropped. If I've missed out on anything, then bear with me, because I haven't actually sat down and planned a video. I just sort of thought I'd chat with you guys today and put this video out, and hopefully it helps someone moving into the new week. But yeah, stay safe in the market. If you need some support, jump on Stocks and Pips, and I'll see you on the next video.